Hey everyone, let's jump right into this. Today, we're looking at a recent Bloomberg report that has literally shaken Wall Street to its core, and it's got everybody in Washington talking too. We're breaking down US President Donald Trump's massive, multi-billion-dollar stock market activity. We're going to stick strictly to the data and the market's reaction to figure out exactly what went down, where all that money flowed, and why financial experts and critics are just so zeroed in on this.
So, let's dive into this. Here is our roadmap for today's explainer. First, we'll look at the 90-day trading frenzy itself. Second, where the money actually went. Third, the conflict of interest debate. And finally, market ripples and speculation. Okay, kicking things off with Part 1, the 90-day trading frenzy, and this truly unprecedented volume of trades.
Now, to really grasp why Wall Street analysts are picking their jaws off the floor, we need to look at a very specific window of time. We're talking about just the first 3 months of 2026, January through March. And here is the number that is just blowing people's minds. Over 3,700. Yeah, according to the financial disclosures, President Trump and his advisors executed more than 3,700 individual stock trades in just those 90 days. I mean, if you do the math on that, we're talking about an average of more than 40 stock trades every single day. To put that into perspective, just consider the massive jump in activity between these two quarters. In the previous quarter, so the last 3 months of 2025, there were roughly 380 trades disclosed. Then, bam! In the very next quarter, that number absolutely skyrockets to over 3,700. It's just a completely vertical jump in trading activity.
Honestly, market experts were completely stunned by this frequency. Matthew Tuttle, a well-known market expert who spoke to Bloomberg about this, really hit the nail on the head. He said, "It's almost like a large-scale algo trade hedge fund." And he's talking about algorithmic trading, right? Where computers fire off thousands of trades in a fraction of a second. For a sitting president's portfolio to mirror the sheer velocity of a high-frequency hedge fund, that is frankly unprecedented.
Moving right along to Section 2, where the money went, focusing on the big tech and defense boom.
So we know the sheer scale of the trading, but where exactly did all those dollars go? Well, the filings show a huge concentration in some of the most influential sectors of the entire global economy. We're talking about at least $1 million invested in each of these absolute heavyweights. You've got your major tech giants, NVIDIA, Oracle, Microsoft, then aerospace and defense, specifically Boeing, and of course the retail and e-commerce kings like Costco and Amazon.
But wait, it doesn't stop there. The portfolio was incredibly broad. We're talking everyday brands: Meta, Uber, eBay, Abbott Laboratories, AT&T, Dollar Tree. Plus, some major plays in the media space, with big investments in Netflix, Warner Bros. Discovery, and Paramount Global. But remember, and this is absolutely crucial, this is highly active trading. They aren't just buying and holding. A perfect example of this is February 10th. On that one single day, there was a massive sell-off. We're talking about unloading anywhere from $5 to $25 million in Microsoft, Meta, and Amazon holdings. Just boom, sold. All right, let's zoom out a bit for Section 3, the conflict of interest, looking at the ethics and governance side of things.
So because we're talking about the sitting president of the United States here, this level of market participation has obviously kicked off a massive debate in Washington regarding ethics. Now, to really get what the critics are arguing, we first need to make sure we're clear on one core concept: the blind trust. Simply put, a blind trust is a financial setup where your investments are managed completely independently. The owner has absolutely zero knowledge of what's being bought or sold, and family members are kept completely out of it. The whole point of this arrangement is to completely wall off any potential conflicts of interest.
Now, what's really interesting about this is the historical precedent. Traditionally, past presidents have generally done one of two things upon taking office. They either sell their assets entirely or they place them right into one of those independent blind trusts. But Donald Trump's portfolio is structured differently. There is no blind trust. Instead, as we just saw, there's highly active trading going on, and his broader business empire is actually overseen by his sons rather than independent, unconnected third-party managers.
So why does this matter? Well, the critics' main argument anchors on the fact that the companies being actively traded are directly impacted by the very government policies the president oversees. Let's look at NVIDIA. They rely heavily on approvals straight from Washington to export their advanced AI chips to China. Then you have Boeing, which is hugely reliant on massive U.S. government defense and aerospace contracts. And of course, your big tech players, Microsoft, Amazon, Meta, they are constantly navigating federal antitrust investigations and new AI regulations. So the critics argue that, even if absolutely no laws are broken, the potential for a conflict of interest is just uncomfortably high when the person making the regulations is simultaneously trading the regulated stock.
Which brings us to our final part, Section 4, Market Ripples and Speculation, specifically looking at the recent Iran incident.
Let's walk through a specific timeline of events from a few months ago that perfectly illustrates how sensitive geopolitics and financial markets get all tangled up. So, point 1, seemingly out of nowhere, unusual activity hits the futures market. Traders start placing these massive bets that oil prices are going to fall and U.S. equities are going to rise. Okay, point 2, very shortly after those huge bets are placed, President Trump publicly suggests that there's progress being made in sensitive talks regarding Iran. And then, point 3, immediately following those public comments, exactly what those traders bet on actually happens. Oil prices plunge and the stock market surges.
Now, let's be absolutely clear about the facts here. There is no public evidence, none, directly linking Donald Trump to those specific Iran-related futures trades. The real issue for Washington isn't necessarily that he personally made those trades. It's more about the wild online speculation and the Wall Street chatter it immediately sparked regarding how political information moves the markets. This incident basically acted as a lightning rod, really amplifying the ongoing debate about how fast, sensitive political developments can trigger massive financial windfalls.
And that leaves us right here. Look, the data is what it is. Over 3,700 trades, billions of dollars moving around, and a portfolio that is deeply intertwined with federal policy. As Wall Street tries to process this truly unprecedented volume of presidential trading, it really forces us to step back and ask a bigger question. In our modern era of lightning-fast algorithmic trading and instant global news, how exactly should financial markets and presidential power intersect? It's a complex puzzle with no easy answers for sure, but understanding the data behind it all is definitely the first step. Thanks for joining me for this explainer, and I'll catch you next time.